With the passing of the big beautiful tax bill, there's very good news for employees that receive both overtime and or tips, because a good chunk of that money could be completely tax-free starting in 2025, but this is only for a limited period of time. So in this video today, we're going to be going through those limitations. There are thresholds that say only up to this level is overtime and tips tax-free, and then you have to start paying tax at it again. There's also phase-outs that once your total income gets over a certain amount, you start to lose that tax-free amount, which then causes people to enact tax strategies to say, how do I stay in that sweet spot where I can get more of my income tax-free? Hello everyone, I am Michael Ruger. I am the managing partner of Greenbush Financial Group, and we're going to start the conversation today is around the tax-free tips. So any individual has tips as part of their compensation package, waitress, bartender, hairstylist, you name it, there could be an enormous federal tax benefit for them starting in 2025, where a lot of that income could be tax-free, but there's limitations. So let's go through the criteria. So number one, up to $25,000 of qualified tip income is deductible. Anything over and above that, you pay tax on. Number two, it applies to all reported tips, which includes cash, credit cards, and digital payment platforms like Venmo and Square. Number three, employers are still required to track and report tip income, but it won't count towards the federal taxable wage base. And number four, FICA tax, which is the Social Security and Medicare tax, still applies to tips unless further guidance from the IRS says otherwise. Now, as I mentioned at the beginning, there are income phase-outs for this new tax benefit. So if you are a single filer, as long as you make under $150,000, you get to receive the full tax-free benefit of the tips. If you are a married filing joint, the threshold is $300,000 or less. So if you're below those thresholds, depending on your filing status, you can claim up to that $25,000 in tips, all tax-free. For individuals that are above that income threshold, the way the phase-out calculation works is for every $1,000 over those thresholds, depending on your filing status, you lose $100 of that max $25,000 deduction for tip income. So if let's say you're $10,000 over the threshold, then you would lose essentially $1,000 of that $25,000 max deduction. And that phase-out calculation continues until the benefit completely phases out, to where essentially you have to pay tax on all of your tip income. Now we're going to shift gears over the tax-free overtime wages. So the effective dates are the same. It begins in 2025, ends by the end of 2028, completely goes away by 2029. But this is for hourly workers that work more than 40 hours in a week and start earning time and a half. There are different criteria for being able to take a tax deduction for your overtime wages, which are as follows. So number one is, if you're a single filer, the max deduction you can take for overtime wages is $12,500. If you're a joint filer, the max amount is $25,000. Number two, this applies to hourly workers eligible for overtime under the Fair Labor Standard Act. Number three, only the premium portion of overtime, typically time and a half wages, is tax-free. The base rate is still taxable. And number four, overtime must be properly documented on the pay stub or employer payroll systems. Similar to the tip income, there are income thresholds that once you make too much, the benefit of getting your overtime tax-free starts to go away. Thankfully, the limits are exactly the same as the tip income. So if you're a single filer, $150,000 in compensation or less, you have the full limit available to you for tax-free overtime pay. For a married filing joint, the income threshold is $300,000 or less. You get the full $25,000 of overtime available to you. For individuals that are above that threshold, the phase-out calculation is also the same. For every $1,000 you make over that threshold, you lose $100 worth of that maximum overtime tax-free benefit. The way these deductions are set up, employees could essentially have both overtime and tips, and if their income is below the threshold, they could benefit from tax-free from both sources of that compensation. Now, the interesting about this change, and we're going to see what employers do in reaction to it, is you could potentially have maybe salaried employees that employers might voluntarily switch to hourly, so they may be earn overtime, realizing that employee could receive some of their compensation tax-free. Like if an employer is having trouble attracting employees, they can say, hey, instead of you being salary, I'm gonna put you hourly, you're gonna earn overtime, and then you could earn more money that's essentially tax-free for you as an attraction tool. Now, employers and employees always have to be careful because there's labor laws as to how much you can restructure depending on what the task and responsibilities are of that employee. But it's going to be interesting to see how much employers actually look to restructure compensation packages for employees that make sense for. Knowing these tax-free amounts exist and they're fairly sizable is going to cause employees to probably do some more tax planning, that if they're getting really close to that threshold, it could cause them to want to do things to essentially maybe defer income into the following year, like, hey, pay me my bonus next year. I'm already close to that either $150,000 or $300,000 threshold. Also, if employees have side hustles where they have self-employment income, they might want to find ways to reduce that self-employment income, either spending more through the business or something to reduce it if they realize it's going to jeopardize their overtime or tip wages on the W-2 side. And from a long-term planning standpoint, realizing you have these 4 years to work where you could get a lot of this income tax-free, it's planning appropriately potentially for that extra income, whether it's paying down debt, building up emergency funds, saving more for retirement. There's a lot of great uses that this additional income could be put towards. This is just one of the many tax law changes that were made as a result of this big, beautiful tax bill. There are so many changes that we've created a series of videos, and I'm going to include links to all those videos in the description of this video below. Thank you so much for watching.